Richard, it's great to have you with us this morning. I'm curious to know your thoughts about at least the prepared remarks from yesterday, because there's a debate about whether or not his comments on the variant being a downside risk to demand are dovish or the risks to supply are hawkish. What do you think?
I think it's too early to tell. I mean, we're so completely uncertain about the nature of Omicron and what it represents. And I think he just indicated the unknown. There are no surprises there. If you assume that they will continue just to taper on the $15 billion level per month, that takes another $450 billion added to the balance sheet by the time they're done. And I guess the real question is the speed with which they do it. Will they accelerate at this meeting or not? But there's nothing new in that testimony. And
so it sounds like
the market. Go ahead.
I'm wondering, you think the hearing today is just a push?
First of all, this is new. They have to appear before the banking committee with such frequency right now that, we didn't operate that way before under previous chairs and under the previous Senate rules. So it's becoming a regular appearance. I think the more drama here will be whatever Yellen has to answer on the Q&A period. And then, of course, you should expect that once again, Elizabeth Warren will seek some dramatic statement with regard to Jay Powell. But I don't think there's anything new here.
Okay. Richard, it's Morgan. I mean, when we see testimonies like this, it really is the intersection of policy and politics. I mean, President Biden did just renominate Powell. We're coming into the midterms next year. Does he actually owe Biden to become politically accommodative? And I ask that knowing that the central bank is supposed to be independent and separate, but a rising rate environment next year obviously has ramifications.
Yeah, I would argue the opposite. It's pretty clear, and again, I have not spoken to Jay Powell about this, but this is firmly my opinion, that the White House wanted to get Lael Brainerd the job. They tested this on the Hill. They got negative feedback, including from some Democrats. And so if I were Powell, I would not feel I owe anything to the president. And what I need to do is just conduct monetary policy according to my independent thinking and that of the FOMC. Because everybody knew that the White House wanted to give this job to Lael Brainerd. So I would argue that he does not need to do anything in political favor. He just needs to do what's right and ignore the by-elections. But that's if I were chair, and I'm not. So there you have it.
So what is the path for monetary policy? I ask that because depending on what happens, and I know there's a lot of question marks and unknowns here, but with another variant circulating around, I mean, we've seen the impact of previous variants and what that's done to economic growth and to skittishness where the labor market is concerned, and then, of course, to supply chain and inflation and the fact that it hasn't been so transitory. I mean, is the risk rising here of stagflation?
We'll have to see. I mean, we do have inflationary impulses. There's nothing that monetary policy can do about these supply constraints. Monetary policy cannot affect that. But what it has to deal with are inflationary expectations and the fact that we do have a longer-term inflationary impulse here than was originally planned or originally expected. So from the standpoint of building in expectations, the way consumers behave, the way businesses price what goes out the door in response to the cost increases of what comes in the door, once you build in mentality, you've got to offset that with monetary policy. And this is the very difficult decision that needs to be made here. But we know this. They're going to continue to titrate the balance sheet. The question is the speed. The market, as Steve Leisman pointed out earlier, is discounting no change at present or less of an amount of change. And once they get that process done, we will probably see the beginning of rate increases. The market's already priced that in at the short end of the curve. So it depends on how quickly they decide to taper the balance sheet, and we'll probably get better insight into that after we have this meeting that comes up in December.